Hello everyone, this is Paul from the APNacademy, and in today's video, we're going to be looking at the best time frame for swing trading. Now, most traders tend to get this aspect very wrong in terms of the time that you're supposed to use to identify key levels when you're going to do swing trading and how to move between one time frame to another. So under this topic, we're going to be also talking about the following. We're going to learn how to identify key levels, or what we call areas of interest, or simply what you can term as support and resistance. And then also we are going to learn how to mark swinging levels accurately in the respective time frames that we are going to be talking about. And then lastly, we are going to be looking at the time frames that we're supposed to use when we're doing swing trading. But before we go to all these aspects that we have listed down here, let's first identify what swing trading is, because people tend not to understand swing trading. They think just because they have held their trades for a number of hours or a few hours, a couple of hours, they have done what we call swing trading. And that's what makes them to misunderstand the whole aspect about swing trading. Some people think that when they take trades or when they do analysis in H4, they're already doing swing trading because they're used to smaller, much smaller time frames. They say the minute time frames. So the moment they use H4, they feel like it's a very big time frame for them, which is a very wrong aspect, as we are going to realize later on in this video. So let's start with defining what swing trading is exactly. So what is swing trading? Swing trading is not just a matter of holding trades for a few hours and then you feel that you're exhausted or tired of being in the trade and then you go. Now, swing trading involves a trader to hold trades for several days or even several weeks, right? And the worst a trader, as long as someone decides to make their trading methodology swinging, the worst they can hold a trade for is just slightly above a day. That's what we call swing trading. So if you hold a trade, let's say for 10 hours, for 11 hours, or 9 hours, 7 hours, 5 hours, and you feel you're exhausted of that, your psychology already tells you that you're tired of holding trades. Most likely, swing trading is even not for you, but you can learn immediately after this video the proper ways of doing swing trading and identifying the correct levels. As usual, we're first going to do the theory part and then we go to the chart, because I would like you to first understand these things theoretically so that we go and apply this theory that we have done on the charts. So in all our videos, if you've noticed, we first start always with the theory part and then we go to the chart when we understand what we are doing. I cannot bring the chart forward when you have not yet understood what we are doing. So let's get straight into the theory levels. So let's start with how do we identify these key levels? For example, key levels are identified using turning points. And what do I mean by turning points? Turning points are simply if the price moves up and starts moving back down from a certain point, it turns from here, this point where it starts moving down from. This is what we call a turning point. Now, this turning point becomes a key area, or what we call an area of interest. Why? It is clearly telling you that price was going up, buyers were strong at this moment. But when they reached this area here, sellers overpowered buyers and then pushed them down. Then also when price reaches a certain point and starts moving up, right? It indicates that at this point here, this area here, there's a presence of buyers. Let me just give an example. If I'm playing, let's say, a bouncing ball, and this is a wall, and I hit this ball that bounces on the wall and it comes back towards me. This is the same scenario that is happening here. It means that there is a force this side that is not allowing this ball to continue going where I've kicked it. It means that there is a force pushing back the ball towards me. This is the same scenario here. If the market turns, of course, there's going to be a fight between the buyers and sellers, but of course, the one who overpowers pushes the other side, right? So these turning points these are the points that give us the areas of interest, or what we call areas of value, or what we call key areas, right? So we are going to learn how to mark these levels. And in case you've not watched how we identify these levels primarily, we have a video for that. I'm just going to attach it in the description, though I'm briefly going through it here. Now, when the market is making these turning points, it's telling us that in this area here, even if it's not historical, but the moment it turns, it means that that area has a significant amount of either buyers or sellers. Are we following? Let me just repeat that. When price moves up, let me just clear this to repeat it properly for us. Let's say when price comes down and turns from here, it is automatically communicating to us that in this area here, there's a significant amount of buyers. So when price comes back to this level here, we expect price to react to this same level. Either we shall have a bounce, or when we break, we shall have the market coming back to it. Are we together? This is what we call an area of interest, or what we call area of value, or what we call a key area in the market, just by using turning points. There is nothing else. So we just have to identify turning points, and we mark them either using slabs or using horizontal lines. And also another aspect that I would like to bring to your attention is that we have two ways of marking these turning points. You can either use the line chart, if you want to use the horizontal lines, right? Or you can use what we call the slab, or you can call it a rectangle. These are tools that are on your analysis platforms, either the TradingView or MetaTrader or CTrader, depending on the one that you're using. These tools are there. And the slab or rectangle, where are we using it from? We're using it in the candlestick charts, right? So the line chart, we're using it to mark the turning points using the horizontal line. For example, if the price went up, came back down, went up. Now, if I want to use a horizontal line, not a rectangle or a slab, I have to go to line chart so that I'm marking this turning point here, because it's either where the price closed or where the price opened. I usually advise people to set their line charts to where the price closed, because closure of price gives us a lot of meaning to the next decisions that we are going to take, right? So also here, when price turns from here, I'm going to bring my horizontal line and mark it on this turning point. Now, these turning points are those that give us our key areas or areas of value. So this is how we properly mark our levels of interest or levels of area, so levels of interest, whereby we're going to make our decisions from. Whether you're a swing trader or intraday trader or scalper, you need to be able to identify these areas. The only difference is the amount of pips or the number of pips you're looking for. That's one. Then two, the timeframes that you're using, right? And then also the entry timeframes and refining timeframes are different. Are we together? Your analysis timeframes are different, and then also your entry timeframes and timeframes when refining your trades are different. That's the difference between these types of traders. So that is how we identify our key areas and how we correctly mark them. Now, the next question that is going to finalize for us the steps before we go to the practicals is this one. What is the proper time frame for doing analysis for a swing trader? I'm just going to give you 3 seconds to answer yourself. You can give yourself a guess. 1, 2, 3. I hope you got it right. The proper time frame or the correct time frame for a swing trader to do his or her analysis is the weekly time frame. And I normally tell people that this is the most important time frame in trading, or it's the most important time frame for a trader to consider. Why? Because it gives us the foundation. It's just like a house. It's for a house to stand, for us to put up the walls and the roofing and whatever comes on a house, they need to stand on a base. And this base is the foundation. We need to create a foundation. And also in the market, we have what we call a foundation. We have what builds up whatever is going to come up, and that is the weekly structure. Of course, we have the monthly time frame. Someone might say, but monthly provides stronger levels than that. Monthly does not give us levels or areas of interest, or monthly time frame actually gives us the direction. Are we together? You can mark all those. You can also mark turning points in monthly, but it gives you the direction. But whatever that you're planning to do if you're a swing trader, it should start from weekly. So the weekly time frame is for swingers. Are we together? Swingers start anything that they want to do in the market from the weekly time frame, and this makes it their analysis time frame for swingers. This is going to be your analysis time frame. So you are going to mark your areas of interest in weekly. Are we together? And then you go and look for your entries. Of course, you will go to daily just to check if you're either at a minor support, because if you're doing swinging, anything that is below weekly becomes minor to you. Are we following? Let me just repeat that. You could have missed it. If you're a swinger, you are focusing or concentrating on weekly, and anything that is below weekly becomes a minor to you, including daily. So you will just go to daily to check if you've drawn your levels correctly. You will just go to daily to check if you have a minor support or minor resistance that may hinder your trade from triggering, and you wait for it to break below that or bounce off it, and then you can take your trade, right? Then another important point that I would like to put across to you guys is when you're doing analysis, this is the flow of analysis. You should start like this. You start with monthly, 1, for direction, then 2, you go to your analysis time frame for structure. For example, if you're a swinger, you start from monthly, then you go to weekly. Are we following, guys? Not the other way around. Or if you want to go up to daily, then daily comes next here. Let me just repeat this. Start your analysis from the biggest time frame, which is monthly, go down to weekly, go down to daily. Most of the traders are failing to mark levels correctly, or are having very, very many levels marked on their charts because they're doing the vice versa. This is what most of you are doing because you are not guided properly. This is what you're doing. 1, you start from daily, then you go to weekly, and then you go to monthly. This is not how analysis is done. No matter what time frame you're in, always start from the bigger one. For example, even if you're doing whatever you're doing from H4, you have to start from H4, go to H1, then you go to minute 30. But you cannot do the other way around. This is the correct one. You cannot start from minute 30 or even minute 15, then you go to minute 30, and then go to H1, and then you go to H4. This is what most traders are doing, and you're getting wrong levels. You'll hear someone saying that I did everything correctly, but I went wrong. It's because you are starting from the reverse way, and you're not going to see the clearer picture. If you want to see the clearer picture, start from the bigger. It's just like a funnel. Big up and then goes down. When you want to, that's why it's called top down. You're starting from the big one, right? So this is the correct way of doing analysis, not this one here. This one is wrong, and you'll always miss out the clearer picture. So I hope everyone has understood the theory part. 1, we defined swing trading, that these are types of traders who hold traders for a longer period of time. And then we talked about the time frame whereby all swingers do analysis from. The time frame they used to do analysis is the weekly time frame. Everything is marked in weekly, not daily. Daily seems a bigger time frame, but it's not for swingers. Daily is for intraday, and even scalpers get their structures from daily. Are we following, guys? The time frame for a swinger to do analysis is the weekly time frame, not daily. You can just go to daily to check if the level you've marked, below it or above it, there's a minor structure. And then you wait for it to be taken out, and then you can take your trades. Are we together? And then also I've shown you guys the proper way of doing analysis. You have to start from a bigger time frame while going to the smaller, not from the smaller one to the bigger one, right? So now let's just go to the charts briefly. Then I show you how you do or you mark your levels if you're a swing trader, and you can use them properly. Let's just go to the charts. Okay, so this is my chart for gold. I'm using TradingView, but you can use any platform that you're interested in. You can use the MetaTrader, you can use the CTrader, even you can use the TradingView to do your analysis. It has good charting tools. It's up to you to choose what you're comfortable with. Now, so looking at gold here, this is the monthly time frame. Remember, we have said monthly time frame, we're using it to just get a direction. We can use it to mark our levels, but we want to know where we are in the market and where are we heading to. For example, if you look at where this market turned from, you can clearly see that it is rejecting from a very strong turning point here, right? Why are we calling this a turning point? Because the market came down, went here, reacted in this level, it was rejected, came back, it was rejected, came back, it was rejected, came back, tried to cross, but was rejected, then finally broke above. So remember, after a breakout, we expect the market to come and retest, and the market is currently rejecting from this area. Are we together? So it's giving a direction that we have to push up. Are we together? And if we are to push up and it continues pushing up, where will be your immediate direction? Oh, sorry, immediate destination. The next turning point above was this one here, right? So this is the direction monthly is giving us. Now, let's just clear this. Let's now go down to weekly, because it is our interest today for identifying our levels. Now, when I come down to weekly, I will want, as a swinger, I will want to identify and play within those turning points that we have identified, right? So let's come and mark our levels. Let's identify the obvious turning points in weekly. Now, looking at the obvious turning points here, we do have this one here, right? We have that one. And also we have an obvious turning point here. This whole area here is a turning point here. Let me just extend it properly up here. So we have this turning point and we have this turning point. And of course, also we have a significant turning point here that we can clearly see here like this, right? So having marked your levels like this, these are the levels that we are interested in. I've used candlesticks, but what about if you wanted to mark using the line chart or using the horizontal lines? Of course, there are very many turning points that we could mark, but we are marking the immediate ones so that you don't overcrowd your chart. You can mark even these upper ones, but right now these upper ones are very far. If we are to mark them, we're not interested in them. Price has already left this place up here, so we're not interested in that. Are we together? We're interested in where price is currently. So if I was interested in this, I'm now going to observe how price will act here, but we're not going to do that today. We shall do it in the upcoming videos. Today, we're just interested in the time frames that we use to do swing trading, and how we can handle our swing trading, where we can handle our swing trading from. And we have mentioned that is weekly, and we mark our levels from the weekly time frame and just use data to observe if we have minor levels of resistance or support holding us. So let's use also the line chart to just show you how I could have marked your levels. For example, I was saying that you just have to observe turning points. This was a major turning point. So you just bring your horizontal line and mark it here. And then also we had this turning point. You just bring your horizontal line and mark it here. Someone may say that also there's this turning point, but this one is not so significant. So we had also this turning point here. You can mark it there. You can mark also others, but these ones are minor, right? So when you go back to the candlestick chart, you realize that even if we are to, let's just remove our rectangles, then you see also how strong the line chart is. Are you saying price is just acting on it there? But let's just put back our line chart, our rectangle, so that we can go down to daily and see how we can observe what we're talking about, just how to identify. So this is how we have marked our levels, and this is all that you need, because you know that if I'm here, you know that if I am here, I'm interested in going here. If I break here, I'm interested in going here. Actually, you may not even have needed this, but we have just marked it for learning purposes. You just need where price is. You just need a resistance which is above current price. If you don't know what resistance and support are, just check through our video. We have a video explaining how to identify support and resistance and how we define them. Resistance is just simply a level above current price, right? It can be a level, or you can draw it using a horizontal line or a slab, but it's a level or an area above current price where we expect sellers to come into the market. If this is the area above and this is the current price CP, this area above, which was a previous turning point, remember we said area of value or important areas or areas of interest are determined by turning points. So if we had a turning point above where current price is, that becomes resistance. And support is an area below current price where we expect the market to turn from. Are we together? So that's what makes support and resistance. Now let's just go down to daily and we see what I'm telling you, how we can use these levels in daily. So when you come down to daily, of course, you can see we had a major rejection. So if you look here, we didn't have anything that would threaten us. Also in daily, we clearly had a support level, a previous turning point. So also we expected this level to act as a previous turning point, which exactly did that. So we had no threat for the market to hold or to prevent us from continuing up. Everything was at support, daily and weekly at support. So as a swinger, I would easily take my trade from here up to here, and you can clearly see that it has taken several days, right? Remember, we said swingers are people who hold trades for several days or even weeks, and you can clearly see these are several days, and we reached our target. So this is how you mark your levels. But let's take another example. Let's just take one more example before we can call it a day. Let's just take one more example here. Let's go with AUD New Zealand. Of course, we're interested in weekly, but let's start from monthly for the direction. We start from monthly with the direction. Now, looking at monthly, what do we observe? Monthly, we observe that we have approached actually a very strong level of turning point. See? So why is it a strong level of turning point? Because the price was pushed down there. It came here again, it was pushed down. And again, we have approached that same area. Are we together? And where's the immediate turning point? Where's the immediate turning point on this pair here? The immediate turning point which we have is this area here. Are you seeing this area? This is the next area that is giving us a turning point, this one here. So this is the direction. The market is telling us that I have reached my resistance area. So there's a high chance for me to move from here up to the next point. So it's giving you your direction. Are we together? So let me just move this away so that we can continue. So this is our, sorry. Let me just put it back. I removed it. So this is our level where we expect price to come to. Now for direction, but you can remove them, right? Remember we said monthly gives us direction. Now let's go down to weekly. Let's go down to weekly. Now when you come down to weekly, the same levels. Let's mark out our obvious levels as swingers, our obvious levels. And of course, the very first level that you're going to observe is this level here, right? It's this level here that we had marked. We have this level, this area here, this one here, where price is playing right now, which the same level that we had on the monthly time frame. And also, if you don't want to use this level, you can use this level that is confluencing with this, because it's also a major turning point. You can use this level here, which is actually holding price. Then if the price breaks here, where is the next turning point that is becoming a threat to this? We have a significant turning point here. If I just extend it like this, you will clearly see that it also historically held price. And where did it historically hold price from? It turned from here. Price was rejected, then of course made a false breakout, came back, rejected. Again, when price broke up, you can clearly see it came and rejected it. So if price manages to break here, you know that your alternative, your next destination is here. But if also price holds here, you know that we are supposed to continue up. But remember, monthly, we are at a very strong level of resistance. So the alternative that you should be looking at is it breaking here, so that your next target is this one. Now, how does daily come into play here? Let's just go to daily and we see. Now, when we come to daily, we have not drawn anything. You realize that these levels still are accurately holding price. Are you seeing? You're seeing that this explains the point that I mentioned, that most people are doing analysis ascending. Yet you're not supposed to do analysis while ascending. You're supposed to do analysis while descending. This is the correct way. This is wrong. By ascending, I mean that you're starting from H4, H1, H4 daily, like this. No, you're supposed to start from monthly, you go to weekly, and then you go to daily. This is the correct way of doing analysis. So this is clearly proven here. We have drawn these levels from a higher time frame coming down to a lower time frame, and the lower time frame is clearly respecting these levels here. You can see we broke up and came back down. So this is how we mark key levels for swingers. And these are the time frames that we use for swinging. We don't use daily, but we remember I've just mentioned we use daily just to check if there is any problem that we have to deal with. For example, like a minor level of support or resistance. Remember, we have said anything below weekly, as long as you've marked your levels in weekly, anything below weekly, daily, and below becomes a minor level to us. Are we together? We have to mark our levels in weekly. Weekly is the time frame that we use for swingers. Then someone may ask that, what about taking trades? What time frame do they take trades at? Please stay tuned, and if you're new, please do not forget to subscribe so that you do not miss out on the next content that we are going to be producing out. And if you've been watching our videos, do not forget to click that thumbs up button. It helps us with our algorithm. Otherwise, I wish you